Hello and welcome to this video, another video in which we're going to talk about few myths related to fundamental equity analysis. And these myths is a replica, a representation from the conversation that I was having with a intern who was working with me. So let me go ahead and take you through this conversation that we had together. So she said, I asked a lot of people about fundamental equity, and she said, Sir, this is what they said, and I'm very confused what to do. They said this is not right, that is not right, etc. etc. So I said, okay, let's take a look at each of these myths that you have been told. So the first she said was one of them told me that fundamental equity analysis is only for financial experts. And she asked me, is it true, sir? Right. So let's look at what did I say. So I said there is no need to be a finance expert to learn fundamental equity analysis. There's no need. But you need to know some basic things about finance, like profit loss accounts, balance sheet, and financial ratios. Now, a financial expert will know a lot more. But if you know these basic things about profit loss account, balance sheet, and financial ratios, you can do a financial equity analysis. And we have provided even some knowledge about this in our course. Uh, her questions continued, and she says, so, do you remember last time you told me that it works for stocks? So, does it work for this? Does this equity analysis approach work for other financial assets also? That made me think. And I said, see, you can use fundamental equity analysis for any kind of financial assets like gold, mutual funds, or government bonds. The principles remain same for any kind of financial asset. The fundamental principles remain same. And what are the two fundamental principles? Before investing anywhere, you need to ask yourself this question. Is this investment safe or is this undervalued? Even for let's say, if you're buying for the purpose of investment, a real estate, you need to ask this question. Is this investment safe? Am I buying the right property? And second, is it likely to go up in future? And if you answer these questions, and these are the fundamental principles on which you can analyze any financial assets. Her questions continued, and she said, Sir, looks like I can buy a car. She was making a little naughty. And she said, looks like I can buy a car in next 3 months, as people told me that it guarantees immediate profit. Is it true? And I could see that the people who were asking these questions were kind of getting greedy here, right? So I answered the question that first, let's understand that fundamental equity analysis cannot guarantee immediate profit because the profit depends on several market factors. Now, if you're buying a car, now first thing, are you buying the right car? Is it safe enough? And as you buy the car, of course, its value drops over a period of time because it gets in use and the depreciation starts. So you need to consider all these factors. Now imagine if you were doing this for a stock and if its prices went up and everyone knew this, what will happen? Then everyone would buy the same stock, right? And if everyone is buying the same stock, wanted price to shoot up immediately, and you would end up paying much more than what you should have been paying actually. So it cannot guarantee, fundamental equity analysis cannot guarantee immediate profit because it depends on several market factors. Her questions continued, and she said one of the things that my friends asked was, can you predict can the fundamental equity analysis predict the future return? And she asked me, doesn't that sound fine? Again, it was a tricky question because all the myths are of this kind, right? And let's see, what did I say? And I remember I said it's tough to predict the future returns because prediction is always fraught with possibilities. You can never predict the future. But what you can do with fundamental equity analysis is that you can make an educated guess and take informed decision. For example, if you buy 100 stocks of a company, then then you can, you know, research this particular stock, and then you can see which one to buy, and there you would be relatively assessing one stock versus another and seeing which one is the best to buy. And your overall return from these 100 stocks is more important than return from one or two stocks. So what it does is improve your probability of making better decisions. So if you were to, without thinking, if you were to buy 100 stocks, the chances are you will lose money. But you will probably at best go 50-50, the law of probability. But if you use a fundamental equity analysis, the chances are you'll be 70% right and 30% wrong. And hence, on an overall portfolio of 100 stocks, you're likely to make money. Questions continued from her. And she said, all right, I get that. And I was very happy to hear that. The overall return on investment, she said, is more important than ever individual return. But can I just invest 50,000 rupees for the first time, or is it only for big investments? She was now getting into a mode of investing, right? So I said, yeah, you can start with small investment like 50,000 rupees INR or convert into US dollars. But remember that, do you remember what I asked her? Do you remember what I told you a few days ago? That before you make any real investments, make dummy portfolios. Don't start putting your hard earned money into investments without learning how to really invest. So do dummy portfolios, then check your analysis using reliable sources, and then you will learn what you're doing right and what you need to do better. And please note that Indian stock market gives about 12% annual return. You might make a lot more in one stock, but you may are likely to lose in some other stock. So the conversation continued, and she said, "So I got overwhelmed while making the dummy portfolio itself. Thanks to my well-wisher, she shared her experience. They told me not to learn it. AI and other advanced technologies do it now." Again, a challenging question. So what did I say? I said new tools can help. AI can definitely help. I also use AI for many things. But understanding companies' financial health will always remain important. And that's where the judgment comes. It's like timeless classics of finance. Human judgment can never be replaced by any advanced technologies, I see, because human judgment will keep advancing ahead of the technologies. Several financial ratios like earnings per share and growth rate after 5 years require strategic human thinking. And machines are still far away. They are very general purpose machines. So she said, but then it is so complex. There are so many complex formula which are too difficult for me to understand. How do I understand that? And I could see the sadness in her face. So I said the formula of intrinsic value of stock might look complicated, but it is not. Most of the financial ratios like interest rate, earnings per share, CAGR from which are used in this formula can be directly taken for reliable websites like Money Control. Only thing you need to do is qualitative assessment of the strategy. Besides this, the practical course in real life can help you understand it better. So, after finally all this, she kind of said to me, this is her words again, and which is what she started believes like I do, that we believe in taking investment advice from successful long-term investment and financial experts. If you are new to the world of fundamental analysis, get expert guidance. Enroll for the course using the web link, the course link that we have given in the description of this video, and learn the practical approach and do well in life. So thank you so much for watching this video on myths related to fundamental equity analysis. I hope you have learned new things again today. If you have any questions, I'll be happy to answer. If you like to do the course, please take a look at the link. Go and look at this course on Udemy, and uh, don't trust me. Go and believe in yourself and see if you really can benefit from doing this course and take your action accordingly. All the best and look forward to talking to you sometime in future again.